Welcome into a daily editorial here on the KE Report. In this daily editorial, I am joined by Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, I want to touch on an interesting close to the HUI, the HUI, the Gold Bugs Index, last week. As optimistic as people are this week in the comeback, the recovery that we are seeing kind of across the board, GDX, GDXJ, even in the HUI, you pointed out to me that close last week was the lowest weekly close in 14 months. That has you a little skeptical of the optimism and positivity of anybody who says that we're going to be breaking out on this run up. Can you share some of your thoughts?
Yeah, sure, Corey. I just, looking at the stocks, would expect them to be in a stronger position given how close gold is to breaking out. It's not that the stocks need to be that much stronger or at much higher levels, but if you look at a chart of, GDX, XAU, GDXJ, any of these things, I mean, you asked about the HUI, we're talking about that. The HUI is below a lot of the moving averages I'm looking at, and it's kind of had, since the beginning of 2017, it's kind of had a sideways consolidation to slightly lower. If you go back to when it peaked at the end of August or early September, it had quite a move down into the December low, then a nice rally up to around 210 from about 175. And literally in a couple of weeks, that came all the way back. And then this past Friday, I mean, we're only talking 4 trading days ago. It actually closed at you mentioned the weekly close. The daily close was also at a 14-month low. Now, that could prove to be a false breakdown. However, it just doesn't seem right to me that, and by the way, the HUI, it's important to watch because it's basically GDX minus the royalty companies. I mean, GDX is managed by Van Eck, and during the bear market, they had to stuff some stronger companies in there to make it more appealing to people because the actual mining companies were doing so poorly. So GDX has it has royalty companies in it that have been stronger in recent years, while the HUI is just basically the gold producers. And it just doesn't make sense to me that a basket of gold producers would close at a 14-month low, and then literally a week later, or let's call it 2 weeks later, considering next week, gold would suddenly break out to like a 3 or 4 year high or whatever it is. That just it doesn't really make sense to me. And you could kind of mention the same thing with GDX and GDXJ. I mean, they didn't close at 14-month lows last Friday. I mean, they were very close to it. And I mean, it's possible that last Friday that will end up being a significant low. But it just seems to me that if the precious metal sector led by gold was really on the cusp of a major breakout, we would see quite a bit more strength in the miners in anticipation of that breakout. So they've just, I mean, it's kind of been meh. That's how you could kind of put how they've been performing in the big picture. So I'm skeptical that gold is ready to break out here just because of the long-standing relative weakness in the miners. Now, look, maybe if gold doesn't break out and the miners firm up here in the next couple of weeks or the next month or two, then that would be a signal that the market's getting ready to break out. But right here and now, I just don't see it.
Yeah, this just speaks to the process that we're in a range-bound trade for a lot of the stocks. But gold, even though on surface it has been performing better, it looks a lot like just a gold positive move thanks to a weak dollar, because you compare gold to U.S. stocks and gold to foreign currencies. Again, you're not seeing a breakout in either of these comparisons, are you?
No, and I mean, this is something I mentioned in my flash update, a premium update this morning. If you look at gold against stocks, that has been really weak, but it's turned around. It's been rising in the last couple of weeks because of the correction in the stock market, and that has come to a bit of a trend line resistance. And gold against a basket of foreign currencies, that chart has also reached trend line resistance. And so these are down sloping trend lines in both these ratios. And if for gold to really have this big, strong breakout move, we would need to see these ratios break their downtrends. And I mean, today we're not really seeing anything that noteworthy, but I'm just look, if we don't see breakouts in those ratios, there's only so far down that the dollar can go for to cause a gold breakout. I mean, in my recollection of history, there's really only one cyclical bull market we had where you didn't really have gold or precious metals being that strong in real terms, and that was 1985 to 1987. Now there's some similarities to that, but I mean that's when the dollar had its worst bear market. It just completely after the Plaza Accords, and the dollar just went from being really high to really low, basically. So that move was all the dollar, and that was okay because the dollar had such a massive decline. I just don't think we're going to see a massive decline in the dollar on that scale. So unless you really get a 30-40% drop in the dollar, you absolutely need to see gold showing strength in real terms. You don't have a real bull market if gold is not showing strength in real terms. And again, since you want to go back to the middle or the end of 2016, I mean, gold has basically it's been a dollar weakness move. It hasn't been moving in real terms. Now that could change in the next couple months. So I'm watching these ratios, gold against stocks and gold against foreign currencies. I'm watching them very carefully, Corey. But I don't see anything imminent here yet. I mean, they're very close. It could happen, but I'm a little skeptical here in the short term. Again, we need to see breakouts in those ratios for gold to have a real breakout and then sustain the breakout.
Yeah, you just want to see breakouts in a wide range of charts. But again, touching on the US dollar and how that has helped drive gold higher and supported it at these current levels, the dollar's moving down again today. And if we were to close this week with where the dollar is, that would be another breakdown below that most recent weekly close that we put in the tail end of January. Do you think that even though gold is really just benefiting from a weak dollar, that the weak dollar could continue and that could, again, just continue to help support gold?
Well, I mean, it's helping to support gold, but the problem with that is gold, I mean, it's helping to support gold, but gold should be, I mean, not to go back to your last question, but gold really should be strong in real terms where it doesn't need to rely 100% on dollar weakness because, I mean, you mentioned the dollar's down again today, but if you look at gold and silver, I mean, let's see, gold is up, according to Kitco, $1.70, which is really nothing. Silver's down 6 cents. So, I mean, to me, that's a disappointment because every time the dollar is down, we should be seeing a big move higher in the precious metals complex. And today is just another example of the lack of relative strength in precious metals. So looking at the dollar, I mean, I haven't quite looked at the daily sentiment on it or the COT recently, but there is support around the 88 level. I know before today it closed at 89. So there is some support at 88. And after that, I mean, you have some support at 84, 85, but it's just, gold doesn't work by waiting for the dollar to tank and then gold goes up a lot. I mean, that's not how it works. So I don't, that's why I don't follow the dollar that much, Corey. I mean, I obviously look at it and I put it in my updates from time to time, but here and now I'm much more focused on gold in real terms and if it's going to show the relative strength. So I mean, sure, the dollar can continue to move lower and that can support gold, but I would much rather see gold showing strength in real terms than what we have now, whereas just the dollar is completely supporting gold. And I mean, the dollar's already tanked from nearly 104 down to 88. That's a huge move, and gold has not broken out and made a new high. I mean, I'm optimistic that it will at some point this year, but gold has to get going in real terms against stocks and foreign currencies. So I mean, I hate to take your question and tie it back to what we just talked about. But for me, when we're talking with the current setup we have, talking about the dollar, it just leads into gold and gold's somewhat lack of relative strength recently. We really need to see that show up in those charts.
Hey, I completely agree with you, Jordan, and I have been saying the whole time as we've been talking that yes, the gold is doing okay, but it really should be doing better when you compare it to a number of different charts. You did mention sentiment. Can we touch on the silver sentiment and the gold sentiment in terms of the sentiment index as well as COT reports? Everything that I'm reading and seeing is that it's looking a bit rosier for silver compared to gold in terms of sentiment.
Yeah, and I like the setup in silver more than gold. Now, obviously, that's a function of gold breaking out at some point, because if gold breaks out, silver will probably start running, and it's always going to run farther and faster than gold in that context. Now, as far as the sentiment, the daily sentiment index after yesterday was 84% bulls for gold, and for silver, it was 62% bulls. And it took a big jump yesterday for silver. The day before, it was in the 50s. So there's quite a bit of difference there, but there's even a greater difference when we're looking at the net speculative positions amongst futures traders. And Corey, that I like to divide the net speculative position by open interest, and I get a percentage figure, and that just provides for an easier comparison over time. And gold, and this data is as of last Tuesday, and we'll get an update tomorrow. So it's somewhat old, this figures that I'm mentioning. But anyway, gold as of last Tuesday was 38%. And just to give you some context, the major highs in gold over the last 10, 15 years have been around 55%. So gold's at 38% right now. Silver is only at 14.9%, or you could round it up to 15%. So as far as the futures traders, there is much, much less speculation in silver at the moment. So I really like the setup in silver based on that. If gold were to break out and perhaps run for a couple months, given where silver sentiment is here and now, silver can make a big push higher, just because the sentiment figures tell us that there's really not that much hot money in the market, and especially so when we compare it to gold.
Okay, interesting comments there, Jordan. As always, there's a number of factors at play, but hey, look, we can still agree that the metals are doing okay, but we'd really like to see a breakout. I think we both expect a breakout, but it's looking more like the second half of this year, maybe even nearing the end of the year. It's a market we'll keep up to date on. I do always enjoy reading over your weekly and daily updates to your subscribers. You're a wealth of information for precious metals investors, and I appreciate you sharing your updates with us as well. Have a great rest of the day, Jordan.